Mhm. Mhm. Screen, this is lying, screen two. Right, okay, okay. Let's make sure we've got the right one. Can you see my mouse, guys?
Yeah.
Oh, God, what's happened there? The world has seen spectacular. Oh, always does it when I've got other YouTube channels open. It seems to just open up all my other channel, all the other videos all at once. But hey ho, I'm just looking up because I've got um, a rearrangement of windows and things here. Let's get going. That's it. Radio. Cheers, Simon. Were absolutely right with the message. It was a caching issue. Well, and like I said, I'd done um, the report on a different machine, and the OneDrive hadn't synced. And it still had the 22nd on here when it was actually the daily edge was the 21st dated here. So there we go. Hi, Pep. How you doing, mate? And, I'll keep trucking. Right, let's get going. ATR, the FTSE's come down. It's a measly 8 from the highs in the early months of 18. So the average true range of volatility has really come off on the FTSE. All-time record highs, US 500 and the Nasdaq. FTSE's down zero point 0.6 off the highs. Dow down just 1%, and the DAX is the largest pullback off the all-time record highs of 1.81%. Um, Interestingly enough, the S&P, another all-time high, has never traded down in the month of July for 10 years. So maybe this will be the month that changes it with all-time record highs. Don't know. Right. So today we're going to have a look at. Let's get the edge. Dunk. For the guys that are watch, this is for the guys that are watching on YouTube. This is a report I stick out every single day, and it tells you market sentiment, what's going on, summary highlights, economic things to watch for the day, extra reading and research. It's got all the links, of course, in here, and then gives you the hot trades for the day that we use in this room every single day. So we've got the FTSE today, the S&P, gold, and just two FX, which is cable and Kiwi USD. So we'll go through those a little bit later because I think we're already in some of the trades. I put something out in. Oh, I've lost my mouse. There we go. Just bring the Slackaroon down. So I put these trades out this morning from the daily edge. Where are we? Here we are. So what we're looking at here is looking for the market came up yesterday on cable, hit some key resistance areas here, then peeled away. We were overcooked on the stotch, hence identification up here on a 15-minute bar. You look at the daily edges of trade yesterday that we did, and we'll go through that live up here. So I'm already in this trade. Ignore this little instrument here. This is one of our robots working. So that was one of the early calls. We'll have a look at these. And this is the Kiwi USD as well. Again, come up to some key areas and failed again and heading back down. High hopes for these two today. So that could be quite nice. Again, if you want any of these, there is links below, but you can get them here. There we are, the daily edge. It's just a tenner a month, and you get 5 reports a week every week with 3 to 5 trades on them every single week. So it's just anyway. Get rid of all that and get moving. So FTSE. Well, looking at I just better move this out of the way so I can see people. All right. I don't know what this little crown, Jamie Lamb. Oh, hi, Jamie. Um, Nice to see you. I don't know what those little crown champs are. They're like little. Anyway, I'll stop waffling. Don't know what they mean. Right. Okay. So footsie, we're going to be opening in under 4 minutes. So what we want to do in a footsie, we want to be closing the closing gap. Um, but we are trading under Camarilla breakout short here. So that's really no good for us. The targets yesterday were hit with weren't hit, but we had one-to-ones. We got the footsie. It was quite exciting yesterday. Well, it was exciting for everyone else apart from me. That's where I'm mad of because I was telling everyone what to press and I pressed the wrong direction. And then by the time I pressed the right direction, the gap had closed. It literally took seconds. So today, you can see moving down into the 1 hour, we have targets today challenging the daily highs and then back up in just above Camarilla breakout long. Whether we get that or not today is a different matter. CBOS has caught, I just turned this off, I'm getting some messages. Sorry about that. Um, Perfect storm, of course, would be for the market to come down, test the daily lows, break, we'll get it along from there, and then we can come up and challenge and trade into the closing gap, which is a daily high as well, which is quite interesting. We would need to break out of this structure here, which is CBOS Camarilla breakout short. Whilst we're below Camarilla breakout short, the market is more likely to go short than it is to go long. So we do have to wait for that trade. And if we break out of here, then we're going to go long. The gap up here is we've got roughly 19 pips, and the ATR today is 8. So potentially what I will do is do an ATR stop of 8, and we could get a 2% rumble on a breakout of Camarilla breakout short. We're just under 1 minute to go. I'll put it down into the 5 minutes and we'll stick some frackers on so you can see. Ideally, we'll have a 5 minute bar break above here and we'll see what happens out of the trap. So the market's going to run in 30 seconds. So we either want a 5 minute fractal break out of here or a break of a 5 minute bar to close that gap here. So that's a market inefficiency that we want to close. So let's see what we can do. So market's open in 10 seconds. Buyers already coming in, you can see here. If we get to the pivot straight away, then I think we can buy that straight away. Yeah, I was afraid we'd get the mass volume coming through. So that's a bit of a shame. That gap will close. That's a bit of a shame. The setup wasn't there. The taking a trade out of the trap with not knowing its actual given direction is high risk. There we are, gaps close within 3 pips. That's it, boom. That's a shame. We knew there was a very high probability of the gap closing, but we needed a setup to do it. You've got to have the discipline and the setup to be able to do this. What we'll probably see here is the market calm down now and retrace, and that might give us the opportunity to get in the market again. So, a bit of a shame, very, very similar to yesterday's action, really, in that we come out of the trap, it went like a rocket straight into the close, and we made some very, very fast money. Or I should say, you guys in the room made some very fast money. I just sat watching it, smashing my keyboard and hitting the wrong direction. But there we go. That's real trading for you. So very nice trade, straight up in the first 1 minute. it closed the gap. So for people who have not seen this before, what this is a cash gap and only happens on indices. What we're really saying is there's a gap here, which is this is the close, yesterday's market close, and that is the cash close. In other words, people have been buying and selling directly into the FTSE to close to buy the market on its opening hours. The FTSE opens from 8 o'clock in the morning to 4:30 in an afternoon. At 4:30, the market closes, and that's called the cash close. So overnight, because all the indices are interrelated. Oh, I'm stiff. I've been going to the gym and I can hardly flipping move today. The market has come off on the American pullback and the Asia Pacific pullback. So when we get the market all the way down here, there's a market inefficiency, and effectively an area in the market that's not been traded in cash hours. So it's part of the market maker's remit is to ensure, where practicable, that the market closes a gap from where it finished the previous day and continues on, either back down or back up. This is called the gap close, closing the gap. And we do that every single morning. And every morning, nearly every morning, 99% of the time, the gap closes. So this is what we trade in our room all the time. Incidentally, did anyone take that punt under this fractal on CBOS breakout for that close?
Yeah, I did.
Yeah, I did.
Yeah.
Hey, it's the ladies that are winning
Oh,
all
really,
the
isn't
time,
it?
aren't they? Flipping heck. Come on, guys. Jeanette keeps winning every single flipping morning, and you. Never mind. Well done. If I'd been trading on my own and not talking you through this, then I would have put an order in above this fracker here, above CBOS, and I put it in the edge report. A break of CBOS would get you along, and then you'd want to stop. The ATR was 8, so you could have had a stop here, and you would have made an easy 2% in 1 minute. Very, very easy trade. Now, the reason I'm not going and getting excited in here is when the markets are running up in the first 5 minutes or so, you can easily, if you go chasing this market, it could easily retrace on you. And it's nice to know that the market did what it expected it to do, but I didn't get the setup that I wanted while we're talking. The setup was there, and we put it in the report, which was a move above 993 would trigger the gap. And that's exactly what happened. And the second target has been hit also. My view this morning was, and it wasn't quite correct, is that the market would rattle out here. Put my drawing tool on. Where's my drawing tool? There we go. The market would, can do a squiggly. The market would rattle out the trap. Oh, that's useless, isn't it? Let's put I don't know, bright red. There's a bigger squiggly line, yeah. That'll do. The market would rattle out from here. So that's what the trade was, out of 993. It would then go into and just beyond the close. We would then get a pullback, and then we could get a fractal break for the 2-day high, and then we'd continue on and look to get into this area here, camera breakout long, over the coming sessions. So not all is lost. If we get a pullback, they will take the pullback and we'll go for the target. Otherwise, we'll leave this beast alone. Well done to everyone in the room that traded that. It was a rapid trade. Hi, Stuart. It was a rapid trade this morning, under 1 minute, 2%. So great. While we're waiting for this market to calm off a little bit, let's go and have a look at the trades that we put in the edge this morning. So I've got a couple of those. Right, so this is a cable. We're having a bit of a pullback at the moment. So can I zoom out? Zoom out. Let's turn the trades off just for this moment. Right. What we're looking for here is the market to, it looks like we're on a bit of a phase wave at the moment. Let's change the colors because we've got a dark color. That'll do. Looking for it. I'm going to change that to, it's not letting me change it. There we go. We've got let's get me drawing pen again. I'm pretty useless at this. So this is a phase or wave one, pull back two, and we're looking for a new wave one to carry on a larger time frame. The market is, as you can see, on a daily basis bullish, but that doesn't make any difference for us as day traders, because taking whole daily multiple movements is of no interest, because we trade within the intraday trades. So we look at 4 hours as our principal source of interest. So we've now broken, we're now under the 200 EMA. The market has pulled up to nearly a 68.1 Fibo retrace level. It kind of failed between the 50% retrace and the 61 Fibo level. And I put that in the room this morning. There's the writing. I thought I'd written all over it. So I wrote this in the room this morning, illustrating. I'll just get rid of this. You don't need to see all this now. Let's get rid of all this. So we came rattling up into here yesterday. We got some early news this morning on trade deficits, which has really weakened the pound this morning. So I'm expecting this to really rattle off. So we came up into some areas here, and that we failed. I was hoping for the market, if it was going to do this large retrace, then it would hopefully come into a 61.8% Fibo, and all the Fibo boys would jump on and reshort this. We are trading, or were trading earlier this morning, slightly above the 200 EMA, and that was the signal. I think that was the note that I put in. I shouldn't have deleted it really, did I? Should I? There we are. Right, okay, so reversal was off a key level. Take a 15-minute bar. If you want to be more, if you're one of the more cautious people and you want the 1 hour momentum with you, then go for it. The reason I chose this morning not to wait for the 1 hour is because, quite frankly, you don't have to. It's a 4:15 reversal pattern, part of the strategy. The 15-minute entry guide is for beginners, from when you're learning. But it's a belts and braces way of entering the market, but you do not need it. We are now clearly trading under the 200 EMA. I just put this on. These are the trades that I had on early. I mentioned the edge from last night, from just after 6 o'clock. Right, so that would have been the trade, and the market has not finished a full one-to-one risk reward on the trade from yesterday when the market run. Can we expand this a little bit? It's pretty useless, isn't it? So here we are. So 4:15 reversal. One of the things a 4:15 reversal does require is that the market does close under the 9 EMA here on a 15-minute bar. So whilst we've got these 15-minute bars here, if you, in the words of Mr. Eastwood, if you're feeling lucky punk, you can take a break of that. I like the confirmation of the break here. So a direct break of that with the spread got us long, got us short into this market. Here, forget about that. That is a robot that we set yesterday, which is now triggered. Is Paul in the room? No, he isn't. Might be on holiday actually, because I keep getting messages from him in Slack in the bot room. But there we go. Right, so moving on this morning, I did say, because I always trade very early doors, and most people aren't up when I'm trading. So let's draw in here. I was looking at, I always mention for people that are in YouTube, on YouTube, we trade from about 5:30 is a massive volatility spike which grows and grows and grows, and that's the switchovers from the Asian Pacific market and the Northern European markets opening up pre-cash as well, and people positioning ready. So that's when this really is the area that you want to start trading on FX if you are in the Northern European hemisphere. Now, if you are in Australia, New Zealand, anything really post 2 o'clock is usually pretty good on cable. So there is the 15-minute bar that is posted, and we want to do a trade below that. The bot already clocked it and is already in there, but that was a 15-minute bar to actually trade. Was anybody up in? Did there anyone here in the room? Not on YouTube, of course, because you won't have seen any of this because it's in the edge. Anyone trade that?
No.
Jeanette again. Wow. Right.
No, I didn't. Yes, I didn't trade it this morning.
You traded this morning?
No, I didn't. I didn't do it. I did gold this morning.
Oh, right. Okay. Okay. Right. So that was the 15-minute bar. We can do another 15-minute. I did say use a 15-minute, but get rid of that now. We can use a 15-minute bar reversal, which we can. We can look for the next 15-minute bar here, and of course we'll do that live. Or we can look for a fractal break. Now, there is a fractal here. There is a fractal there. So I'll turn the fractals on so you can actually see it. Take that off. Take the drawings off. Right, so there is a fractal here on a 15-minute, which would be okay. I prefer 15-minute bar on the FX. I like 15-minute frackers for crude oil, which we could trade today. And I like that for gold as well. So there's a 15, I prefer 15-minute bar here, or because the market's made a decent move. What is the rough ATI is around about what, 25? What is the move that's been made from those lows to the highs? Yeah, it's a big ATR. Market has made quite a large 1 hour ATR move. Just looking at the on-balance volume. Again, this is a bespoke indicator that I've developed for PRT and for TradingView. It's one of the very few indicators that looks forward rather than looking back. Gives you a heads up of whether on balance, where the volume is going to go. So whilst we've got the green candle here, the on-balance volume is clearly to the negative side. If we run this down into a smaller time frame than we're actually trading, so we're at 15 minutes here, and we run it down to 5, you can see quite clearly the volume was looking to come to the mean here, but it is quite clearly on balance, it's down. I can actually candles changing its color down to red as well. So the momentum is clearly down from the 4 hour to the 1 hour to the 15 to the 15-minute price action. So a good point here is there's the 15-minute momentum from the 200 EMA. So that's momentum. The 9 EMA I call that the price action indications. The price action, if we are trading under the 9 EMA, then the price action is negative, with the momentum still being positive in every time frame that you check. So if you run out to 1 hour, we are negative on the price action, and we're negative on the momentum. Let's jump into 5 minutes, because we can do a fracker here, a 5-minute fractal. So you can see this structure is more or less a double tap here, with a double tap here. So we're now getting what appears to be a little bit of a consolidation here. And as you know, when we get consolidation, if the market's coming down, it normally, if the consolidation is going sideways, the direction 8 times out of 10 it takes is it continues in the same direction as it entered. In other words, down. Not all the time, about 80% of the time. So knowing that, knowing everything is pretty negative on this market, we can look to get a fracker break under here, I think. And measuring that 8 ports very, very shallow. So let's have a little look at the low. The low here is, we'll call that 13,466. We'll round it down. Spread is just over 1. I think we can get into that at 13,465. So 13,465, we'll just use, could do it slowly using the ruler, roughly there. The top of the fracker is 9.5. We're going to round that up to 10. We're going to add 1 pip, and then we're going to add the spread. And the spread is, well, just 0.9, so we'll call that 1. So we want to add 12 on here. So it'll kind of, that's 12. So we're looking at 12 and 12 to get into the market. So 1% risk on a 12-12. And at 66, we're in the market there. So we are looking to get a 1-to-1 risk reward. I've done that wrong, haven't I? Where's my 1-to-1 risk reward? Ah, right. Best if I drew it where the stop is, wouldn't it? So there's the 1-to-1 risk reward on the 5-minute fracker. So we can keep an eye on that. Ignore this. This is a robot trading. It's little frackers. So into 15 minutes, how is that looking? You can see where the market is actually stopped. Markets do repeat. I'll just turn these fractals off just for 1 moment. Markets nearly always repeat themselves. You can see the market pulled up here, pull back. So there's a phase wave there. Markets only run in two directions. They either go long or they go short. They don't do anything else. But they do run in phases or waves. So you can see there's a wave 1, bullish wave 1 there, pull back, another bullish wave 1. And then the market then has turned and it's just falling away. It's just like a rocket coming up, and then its parachute hitting, it's just slowly coming away. As soon as the market starts coming through to some key levels, and there's a lot of people use simple moving averages and things, the bears will certainly get in control, I think. But to run back and illustrate markets repeat themselves, if I just drawing that there, it's this little light called baby blues here. The market has been up to this area, come back down, and this resistance now comes support. And that happens at all levels, whether it be 5-minute level, 1 hour level, 4 hour levels, daily levels. Markets repeat themselves because it's people who trade, and people do repeat themselves. So you can see bouncing off here and here, then running up and rejecting here. And that's why the market has bounced off here. So I'm going to wait for that to finish. I'll take that off. So market is clearly negative. The stotch, we're starting to get a little bit of a build up on the stotch. on-balance volume has gone green. It's showing red here, but the underlying trend of on-balance volume is clearly green. So if we turn that to 5 minute, you can see the volume here. We're expecting this volume, really, expecting this price action to rattle around like around here. What we're looking for really is the market to give it up and drop into the final solution for a one-to-one. For trade, I'll just turn these trades off. What I'd really like to see is the market come down to where it's been to before, which is 13.3 or 1.3375. But we're using a spread account here on pro real time, so it counts every single pip. So it's 13,375. That's where we're heading to. The market is clearly down on the 4 hour. So that's a nice check. The market is kind of flat, but we are trading under what has been quite a strong down momentum, and we're now trading just under the momentum for coming down. So we just need this to play out. It might take a while to play out, but the key for being a day trader is having a strategy you believe in, being patient and resilient in the way you apply it, and the result will be, if you have a strategy that wins more often than not, and you can wait for the setup, and you can rinse and repeat, which is easily said, then you can make money into the markets. You're playing the statistics game with setups that work more often than they don't. And these work, I think what we're using, a fracker system here, using a 15-minute bar here. There's all sorts of different systems to rip money out of the market. So I'll put a trigger on that and see where we get to there. Alert, I should say, on that. We can get back to it. The other trade that we've got, and that's in the edge here. The thing as well is that what you want, it's not just a swag trade, what I call a scientific wild ass guess. There's method in the madness, and there is, a little ditty on why this market is negative. Tells you what happened yesterday, and then tells you what's going to happen today, hopefully. I should call it the oracle. All that gets broken now and again. Yesterday, we experienced a failure on the Kiwi USD market going up. We'll have a little look at that, but we're going to go on to the Kiwi now. A failure into the morning, got the money back into the afternoon. So we'll wait for this alert to go off. Kiwi USD. Right. So yesterday we were trading out the trap. We had a nice, lovely 15-minute bar there. Now, this would be something that if you were using the belts and braces approach, of course, then the 15-minute bar trade would have been a break under here. So the 15-minute bar trade would have been a break there, because the market, although it had broken the 9 EMA here, it hadn't broken the 15-minute EMA here. So that was the bar under 200 EMA and a cross there. So if we had been trading the belts and braces system, as I would call it, you would have never entered the market, and we would never have lost our money. Or more importantly, not more importantly, but I would never have lost my money. But the market then lost. So once you've learnt your lesson here, and with trading above 200 EMA, you do not try and do it again. You would wait for the market to break the next levels. So again, resilience patience is the key. There is a trade here, but it's trading above the 200 EMA. The reason why this was a setup trade, can anyone tell me why we chose to take that trade when the earlier trades trading above the 200 EMA failed? Anyone know? Silence from the room. That's okay. Absolutely okay. If you pull back, because every time you trade, you need a rich picture in your mind, and you can't go down a tunnel vision of one particular strategy. As a trader, you've got to adapt. You've got to be able to read the markets and understand what's going on. So as the market came up into this resistance area, the observation was took that we are completely overcooked into this area. In this area before, the market has shown some resistance into here. It failed into here again, and the market started reversing off here as well. So very interesting that if the market then breaks back through the 1 hour 200 EMA. So although the market is higher on the 15-minute EMA, and we failed previously here, we have a different scenario here. The market got rejected off a key area, key 4-hour and 1-hour resistance level. So when the momentum then moved under the 9 EMA here, it was ripe to take a trade here, because we got a resistance into there, and the stop was above the previous swing highs on the 15-minute. So the entry was here, previous swing high was there, but with the spread and with your extra 1 pip to stop a double tap reversal, the stop would have been here, not up here. But it doesn't really matter where the stop was in this illustration, but it does matter technically. When you take these trades, it's above the previous swing highs. You could have took it above here, and it still would have worked. But I just wanted to keep that on. I'll take it off to make sure, just to show you, what the rationale on why. So I know we put a lot of YouTube, there's a lot of videos on YouTube, and people follow the snippet YouTubes, and I think on average, I think a lot of the videos like between 5 minutes and 20 minutes. On an average, people watch it for 5 minutes, if that, and then ask loads of questions. But the disappointing thing is that the only way people are going to get the information is if they've got the patience and the resilience to watch the video all the way through. And those YouTube grazers that don't, they're always looking for the golden goose. There isn't one. You got to put the time in, got to put the effort in, and you've got to have patience and resilience. Most people don't. That's why most people fail. So you get all the grazers coming in, loads of comments saying, oh, that didn't work, this didn't work. And when you ask them, did you watch the whole video? Oh, no. Watch the whole video, then ask the same question again. And no one ever comes back. So, sorry, I'm getting on my orange crate a little bit. So the things that we teach in the room are things like, well, there is a strategy. There is an advanced strategy as well as a beginner strategy. And then there's training the trader to be able to read the market, to be able to understand your environment, to be able to make decisions based on price action and what actually happens. So it's not straightforward as 1 + 1 = 2. It would be great if it was that easy, but it isn't. So where are we now? We are in a trade. We are in what was a fracker. So fractal trade here. So market is pulling back a little bit. We had a 11 point run. There is a alarm here for getting getting 1-to-1 out of the market. I think that's a 1-to-1. Yeah, that's a 1-to-1 alert to get 1%. You can see the fractal structure for the first time. Well, that was broken again, and it's getting broken here. But time in the market, we should get our 1% out of this. We are kind of overcooked on the stotch as well, so that should be okay. Greg, message retracted. Oh, I wonder that. Well, I watch the whole video each week. Cheers, Greg. I think Greg's one of my biggest supporters on YouTube. He watches everything and to the end, which is brilliant. Because I do have a tendency to waffle. So there might be a nugget right at the very end that I just remember. So if you're not watching it all to the very end, then there might be the odd nugget, and maybe could explain things in a shorter video. But hey, that's just my style. Right. So we're in the market. We can still be in the market. We can still do another trade. We could do a fractal. There could be a fractal break here. If you're doing a fractal break here, then you're under the trackers, and this will form a new fractal top. So you just need need to be patient, wait for the market to reverse. We'll put an alert under there to get the market in a position where it could get a reversal. I'm just looking at where we are at the moment. So there we go. So FTSE closed the gap very quickly, 2% trade within 1 minute. I missed it completely. Too busy talking again. Well done to the guys in the room that did that. So bots, USD CAD. Just have a look at what this is. These are filters that in real time find all the trades for us. So this is saying put the fractal bot on, and let's just have a little look. USD CAD. So all right, yeah, it's broken back below the 4 hour, back under the 1 hour. Right, okay, and it's overcooked. So USD CAD, guys, we'll stick the USD CAD on, open the bots. USD CAD. Where's my USD CAD bot? I haven't got one. Oh. What's happened to me USD CADs? Bear with me a minute, so look. USD Swiss. Right, it's not on, so I must have deleted it. So we'll put it back on. So Simon, you've got those. Rory, do you have the bots? Not many people in the room this morning.
Yes, I have.
Right, okay, great.
Yeah, I'm
So
going to put that one on.
Sam's got them, and Rory's got them. What we'll do, we'll set up a bot. Right, we'll do it live now. So before we do it, we'll have a look at the last phase waves. So what we want to do is to have that bowling ball bot to be able to work in an environment like it's run before. So you can see here we've had some nice pullbacks here. We've got another pullback here. So what I would like to see is a bot that will work in that environment, because we want that to continue through today. So let's go back and pull up a bot. Oh, I'm still doing this one while we're here. There we go. Nearly finished, actually. So this is a robot, I've got some DFRAM issues as you can see. So this is a 15-minute bot, and this is as well, it's a deep learning bot. It can't be an AI bot because it's within the broker environment. But what this actual bot does, it looks at the 15-minute charts. It then looks for reversals. It then uses a metric. It reads the average true range. It reads the volatility as has happened over the past 6 months. So it remembers in its database that there are changes with in ATR ranges and the VIX index. It then looks at the current market. It then checks the VIX volatility in the average true range. It then looks back to see if there was a match in the previous 6 months. If it finds that match, it does the overlay. It calculates a 1% risk reward. It goes in for a 1-to-1, and the 1-to-1 is based on the volatility in the VIX, as well as a 15-minute bar reversal. It then trades it once it gets in the market within 20% of the overall target. It then triggers a stop to entry function so it can't lose. And then as it gets into the evening at 10:30, it checks if it's in profit. If it hasn't already hit the target, and then takes a profit. It then resets itself, ready for another trade. And it's nearly ready. It's nearly on. But it was about 500 odd lines of code. I've got it down to just under 400 now. Get it a bit more efficient, but quite exciting, really. It's the closest thing we'll get to artificial intelligence. It can't think forward, but what it can do is look back at multiple scenarios, then match what's going on, and then it will match today's scenario, today's volatility, today's economic response financially, and trade it rather than being a dumb bot. Right, I better get back to what I was doing. I'll get carried away. V4s, these are the V4 bots, aren't there? So USD CAD. Why have I got a modified USD CAD? I'll have a look at that modified USD CAD. Why did we modify it? We changed it with a break-even level to stop IG's messing, IG mover when the market has got economic events happening on, or it seems from time to time when they choose. IG stops you putting stops very close to the actual price action, and we were getting stopped out. So what we're going to do is we're going to model because we're doing day trading, this is 5 minutes, we want to be in and out quick. So what I want to do is we've got the 17th of July there. So what I want to do is pull up some data, enough data to go. This is going to run on 5 minutes. So I'm going to turn this down to 5 minutes. And then we need enough data to go back to the 17th of July. So let's put 3,000 units in. That's enough, isn't it? 3,000 units. And now we're going to tell it to model from July 17. And we'll take it to real time now. So 17. Whoops. Why isn't it doing it? I have to override this. Sometimes does this. Right. Now it will let me go back to the 17th. Don't know why. Bit nuances, really. Right. So we're going to model from the 17th, and we're going to look at how we can work. So what we're looking at here is got the spread at 1.3. We're going to put our training account size in here. The bank so automatically calculates the bank size. we're going to put a character in here to model the one-to-one stop. So we're just going to alpha 1. So that's really just the tag. We're going to add some variable optimization here. So we're going to put our tag in there. And we're going to say, last time the ideal stop was 25 pips. So what we're going to say is, well, we don't want anything maybe under 10 pips, maybe something under 35, let's say 40 pips. And we're going to do the model. We're going to model all the scenarios. We're going to not walk forward. We're not going to do any sample, in sample, out sample. We're going to model what happened. Right. So let's do the back test and run all the different scenarios for 5 minutes into here. So we'll hit that button now. And now it's doing the modeling. And there's the result. So with the current hit rates up here, it's going to come up with, it's looking at an 85% hit rate. And over that period of time, will deliver 4.71% return. If the action follows the action that has previously been had in this little economic period. So let's have a look at what we come up with. I come up with a 19 pip stop, an entry with an 85%. So there's a 20 pip stop there. That is, give it a bit more wiggle room. Still very high hit rate, slightly less. I think I'll be quite happy with a 20 pip. There's a 25, the current one is 25 pips there, but it's obviously not catching the runs and resetting. It's one less trade. So I'm going to go for 20 pips there. I'm going to take, this is the curve. So as the market was starting to roll off, what you often find is when the market starts to roll off, it has hiccups. The market tries to do a retest and a retest, get double tap reversals. How many times have you put a trade in and the trade's going right and then it returns back, knocks you out only to go back in the right direction? That's the same for bots as well. But then it's got on a roll. Right. So what I'm going to do now is I'm going to take that variable optimization off. What I'm modeling is not the best scenario, but one-to-ones. So we will, and I've just got it modeling the best percentage win, not the best. I'll tell you what we'll do. I'll run another one. So it's, don't forget it's 20, just to illustrate to you. So it was 19 or 20. If I say, now give me the best gain scenario, I've still got everything in, haven't I? So it'll now model the best gain scenario, which is identical. So in this occasion, you can't squeeze anything out even on the 5 minutes. So what I'm going to do is take the variable optimization off, dunk, off. I'm going to write into the code here, we're now going to use 20 rather than 25. And I'm going to run it like that to see if over that period, would it have given me the same result? Yes. 85% hit rate should be. 85% hit rate. So, fine. So now we've got the bot and it says switch it on. We're now going to switch it on for automatic trading. So automatic trading, make sure it's trading in a 5 minute scenario, 5 minutes, prepare for auto trading, and then start the auto trading, give it a maximum contract value. Gear wheels go orange, then they turn green. That's now been sent to the server. You don't need your computer switched on at all now. That bot will do all the trading for you quietly. So there we go. That's very quick scamper into how you tune your bot. I think I've got them in. Where have I got them here? Where's the bot channel? The Dirty Dozen. So these are the trades that are still running. Cable trades, as you know, in a dirty dozen. These are the all the stats. I need to update the stats actually. Whereas last time I did them, I've not done them for a while. Is he in the room? No, he's just not in the room. He's a big player of the bots. Where's my spreadsheet? Ah, there we go. This is the spreadsheet. So as a tracker, it's heading for 200% return this year, 24% on January 17, February 16, 28, 23, 3 in June, mainly because of the holidays, and that's well out of date, because as probably people won't be aware, I've been in I've not been trading because of health issues in the family that I've had to support. So this is the bots. So yeah, it's not doing too bad. It needs quite a few updates. We're a few days out of sync, but it's heading for over 100% return a year. I should keep looking. Greg, please let us know the bots results for June and July so far. Oh, right, I've already done that. Right, okay. Yeah, Greg. Alice, good morning, Alice. Are there any open deals for me to copy, please, on the charts? I cannot understand where stop loss and take profit is. Yeah, Alice, can you please also look at the 40? Looks good for a sell. Absolutely no chance is it a sell. Don't throw your money away, Alice. Give it to charity, because that's what you'll do if you try and sell the DAX. Well, let's just so I'm looking at the wrong screen. Let's have a look at it. So, more right, just for Alice. Sorry, Alice. Where are we? So we've got USD CAD on there, so we don't need to look at that. The bot will change that. So the trades that if you want to copy what I'm doing, we're already in. If you want to screenshot that, I should make, when we're streaming in YouTube, maybe make the text a little bit larger, but we're already in from 5.9, 5.4. If you want to get in, then I would suggest a fractal break of 5. If you write these down, I'll put this into the chat. So NZD USD 5 min frac
trigger
would be a break of 5
alert trigger
9 5 4 stop
alert trigger
I could go for a, where's my mouse?
alert triggered
Fractal stop of 9 pips. Same if 1-to-1 or target.
alert triggered
Let's put this in for you. 59.15 of pips. The same if 1-to-1 target or 9 5 915.
alert triggered
Yeah, USD CAD's not a manual trade today anyway. It's not come up to high probability. It's come up on the bots, but that's it. And the cable So we're looking for a break here. So that break is that if you want a screenshot, I won't type that in because there's lots of other people here as well. 30, actually, I'll just put this in very quickly. A bit too far from the slow EMA. Don't use a slow EMA, so that's pretty relevant for this trading room. We want to use exponential moving averages. Boom, 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 boom. Let's British pound USD. Short.
Alert trigger.
We've got an alert triggered going off, so I'm just going to do this once, but I don't like to do this because we're missing things. 12 pip stop, 12 pip target. Bonk. There we go. Just for the look for the alert triggered. What's alerting off? Oh, Kiwi USD. So all right, yeah. So it's a trigger that we've already had here. So we're looking for this market to break out of this consolidation area, as you know. Let's follow the plan. I'm not going to go scooting around all over the place. The plan, Aussie USD.
Alert triggered.
I'm just odd USD. I've not traded that. Ah, it's the robots that have. Right, okay. Yeah. So we put those in. Ah, right, yeah. So that's I notified the robots. So cable robot you can see trading, Aussie USD robot you can see trading, and we're looking to get 4% out of those. So yeah, if you're interested in, let's have I think there's an offer on those. If you want to become part of my trading bot community, whereby we do the bots and I show you how to do the bots. There's guides on how to use them. We have weekly meetings on the bots, etc. And you know, as I say, we're forecasting over 200% return this year. But you become not left on your own, become part of the bot community.
Alert triggered. Alert
I
triggered.
think they're on here, Daily Edge. If you're not in the room, but you're on YouTube, I think you need to get absolute head red if you don't use a Daily Edge. But there we go. Ah, right, yeah. So the bots, there they are. These are the bots. It's now 17 bots, not 15 bots, and they run to the end of the year. So they do really well. But they were mainly developed really for my personal trading room. But I have now got a bot room that there are people inside the bot room that just use the bots because they can, because they're already traders. And we started off as a Dirty Dozen community, and everyone's in there using the bots. I won't labour the point because they're just there as tools to use. And I'd forgotten about that. And the good thing is, you know, you might forget about it, but the bot never forgets. It never sleeps. And that's going for a 2% trade. I'll put an alert down here. And then we can maybe come back to that. We haven't gone on to gold yet, which is the last one on our list. So, there's a bot on gold there. We've got another bot running on gold. So that's the code. It runs from 2 o'clock in the morning till just before 10 o'clock every single night and works incredibly well. And we just leave that running all the time. I'll just go back to the alert.
Alert trigger.
Cable. Best to go and have a look at cable, and then we'll come back to gold. Right, cable.
Alert trigger.
Why is it triggering? Why have we got an alert triggering on cable?
Alert triggered.
Where's that flipping alert? Oh, Kiwi USD as well, right? Okay, right. So better look at key. So we expected this to drop out the bottom. It hasn't done it yet, but the expectation is 8 times out of 10 it's going to drop off. We are over halfway now on one of the manual trades. The bots 8 pips into the trade as well. Kiwi USD. All right, yeah, this is an alert triggered because I'll be so did anyone take the so there was a one to get rid of that. Now we don't need to see that. There's a one, so we've kind of 1-to-1 risk reward here now, so we've got 1%. Is anybody in the room in this trade? Sorry. Do I really want to start trading this again? Don't want to trade this further. I think what I might do on this is if we see 11, we'll just smack 11 and take 1% out of the market. And then I'll wait for a break of this soft tissue area here and then target all the way down to 59.15 again. So if we see 11 on here, we'll just take it. We'll just take 1% there. It's, oh. Why is it? It should have, maybe should have triggered there. Have we got a freeze? You can see the market is below my stop. That's a bit peculiar. I'm just looking to IG. IG. On Kiwi USD. Right, okay, well, we'll work. That's correct. It visually doesn't look right, does it? We'll do a stop to entry anyway. We'll do a stop to 5.5, well above this area here. Just so if we lose, we win. If we win, we win 1%. So that's an ideal scenario to be in. Not sure why that didn't trigger, but there we go. There's that doesn't look right, does it at all? We are trading under 42. All right, it's eventually triggered and done it. So there's our 1%. Nice. Get 1% in under the bag. And then, so if I'm putting an alert for a break at this level here, and then we can take, ideally we'll have a bounce here, and the market will come down to this soft area, rise up, and then we'll take a 15-minute bar down into here. Final solutions at 5915. But I took the 1% because I missed the 2% on the FTSE this morning. So if you did this and the FTSE, then you're 3% up at the moment. So not too bad. Gold. Let's go back to gold. Go back to gold. Are you still? Oh, Jeanette's gone. Got our mentoring session at 10:30. So forget the bot. That's the bot trading. Go back to 4 hours. What I don't want to do is scattergun looking at all sorts of weird and wonderful things. What we have is a report drawn from 166 live data sources telling me the highest probability trades. So why on earth would I want to go scooting around the market looking at other things when these are the highest probability trades from 166 different data sources from a microeconomic, daily economic, technical, and political point of view? Yes, there's lots of other trades that you can do. Of course there is. But as a trader, do not be a moth decide what you're going to trade, have your toolbox of your weapons, your strategies, and just coldly implement them. Don't need to go all over the place. I give 5 to 6 opportunities a day. You only need one opportunity. You only need that 1% a day. That's all you need. If you get 1% a day, you'll do better than most people do. Nearly everyone. Ideally, in the room that we kind of train people to, when you trade on your own, if you have the ability to get 2% a week, and that's quite hard to do as well, but we generally can do that here. I know we've done 3% this morning, but 2% a week will give you compounded 161% per year. If you times your bank by 161% a year, doesn't take many years before that becomes a very big number indeed. So do not go flitting around the markets. Get some focus. If you want some focus, for the price of a cup of coffee a week, it will give you 3 to 5 trades every single day with the highest probability that they're going to hit the target. So stop flitting around trying to find the perfect storm, because really, these are your best bets for the day. And that's not me saying that. Well, it is, or eventually saying that. It's I get my AI tools to go to 160 plus different data sources every single morning, and it gets all the data from Reuters, from Bloomberg, from all over, puts it all in one place for me, categorizes which are the highest probability based on all the criteria that I give it, to say these are the things that are the best. I then review it from a technical point of view and make sure the technicals line up with the fundamentals. Then I put all the levels in and give you an idea of what's best to trade. And it's been going since April, and it's never lost a day. There's always been some trades and they always won. We've had trades that lose, of course, individual trades, generally get them back with a reversal during the day. But £2.50 a week. In fact, I don't know whether I am doing. I've got it out to the audience, and I was just talking to some guys yesterday. Whether I keep sending this out to a wider audience, I'm not sure, but I think it's helpful and useful. Helps guide people, hopefully, to be better traders.
Yeah, I think it's very helpful, Steve.
Oh, well, yeah. Cheers, guys. They're the guys in my room, but they've got to say that.
Yeah, no, every morning I read that, so that's brilliant.
Great. Yeah, I put a lot of it. I'm on the screens from 5:30 in the morning, and it takes me from 5:30 in the morning through to 7:30 to analyze the data, put all my levels on to try and help people get the best possible chance in the day to trade.
Yeah.
I don't think people realize how much effort goes into it, but at the end of the day, it's only a couple of PDFs. People look at them. But anyway, there we go. Right, get back to it. I'm going to start rambling again, so stop the rambling. What we're looking for are pullbacks. Yesterday, just to recap, best use this a bit more. Right, yesterday we had on our targets on the previous edge, 33.88, and that got smashed to bits, which was really, really nice. Today we're looking at buying reversals and targeting the 3,400 and then 3,445 in the coming days. No real big news out today to move the market, so we're looking at the general movement, and we're looking at this lovely phase waves. Phases one and pull back, another one, double taps here, reversals, and we're looking at this next phase pullback to go and smack our target, first target here, and then our second target in the coming days, or just getting one-to-ones. A breakout of here will take us into here, and then the larger targets that's not on the edge but in the room that people know is at 34.72, and I keep my bots on all the time to catch all these runs, and hopefully we will catch those runs. So let's have a look. Is there anything setting up? Oh, right. Oh, we've got a juicy setup. Right. So 15-minute bar. This is a grade 2 15-minute bar. There, followed by a grade 1. So we can put this trade on, and we can put this trade on now. So we're looking at a top to bottom 4.5. We're going to round that to 5. Spread is 0.3. Stop needs to be 82.9. Break of this bar, we'll get away with breaking this bar at 5. So 5 pip stop, 5 pip target, 5 pip stop, 5 pip target. We are looking at a fractal break, 15-minute, but it's a 15-minute bar, and I always trade 2% on gold. You don't have to do that yourself, but there we go. There is the trade, and we are just moving into some structure that has already been hit. So it's highly likely to be hit again. So there we are, into that level. So when I mean this is a grade 2 bar. Now, if I get the 15-minute guide out, again, the 15-minute entry guide is free, guys. Links below to get the guide. If you haven't got the guide, then, and you think some of the things that we do here are pretty good. I'm just looking. I'll just pull it through. Where's the strategies? So this is the data. This is all the database. 15-minute bars. 15-minute bars. Where are we? 15-minute bar reversal. There we are. 15-minute guide. Right. So to pull this to one side. When I said a grade 2. So this guide, it takes you through exactly how to look for a 15-minute setup, and tells you the sequences you should be doing. It then illustrates on all the different time frames what you are looking for, and then gives you the minute detail of what are the best bars to look for. So this bar here, you can see here, there's a small wick, nice body, longer than the wick, just a little pimple at the bottom. That's a grade 2 bar. That's a 9 EMA, and it's just about picture perfect. That is a great entry. You cannot get a better entry than the flat bottom Icanashi bar and a break of that, and we're getting a flat bottom Icanashi bar there. Now, these are momentum bars. We only use Icanashi in the room. And we take a break of the Icanashi. You get all the trolls saying, "Oh, it's talking absolute crap." Icanashi bars are very good. Otherwise, I wouldn't use them. Anyway, I won't go down the technicals of Icanashi bars, but there's a grade 2 bar there, which is very, very good. Best one is the next one coming. If you want to get hold of that, it's free. Where's my website? I'll show you where it is. Go to the website. Free resources. Free resources. So I keep batting on the biggest thing that. So obviously, there's quite a few resources there. There's reason why traders fail, risk management, how to manage your bank. I put that in because I've got lots and lots of people talking about simple moving averages and exponential, so I just stuck a little thing in there to show people what they mean. And the single most important one that very few people actually download, which is the key to being successful, is the importance of emotional intelligence and managing your emotions during trading and being patient. It actually goes through it's a really good guide. And not a lot of people download it. Probably that's why probably not a lot of people actually be successful traders. Read it, throw it in the bin after you've read it if you want, but read it, and that will really, really help change how you trade. Stop the waffle. This is the guide, 15-minute guide. There you go. That's the pages that you've just looked at, and you can get that for nothing, just to help people. So if you haven't got the 15-minute guide and you think what we do on here is reasonable, there's a guide. It's free. We are clicked in now, broken up through there, and we're looking to make 2% out of the market there. Yeah, I agree. 1% a day is awesome. Yeah, it is. And we do that nearly every day. Sometimes make considerably more. But there we go. Don't shout about it on YouTube because all the trolls will come in and say, oh, it's a load of rubbish. But every single thing what we do here live is traded and recorded live. Every single thing. So we can't claim anything that we don't do to prove it. There we go. HARKO Day Trading. Recorded sessions. We started doing this. And when did we start doing this? Whoops. Oh, I've only got 2020, 24 here. Let's put the OneDrive up. Right, recorded live sessions, 1 terabyte of recorded live sessions. So this goes back to 2019. Every single day is all recorded, every single trade, every single thing that we do. So do you know what? We can't claim anything that we don't actually do, because someone can always have a little look. I don't know what to date this is. July 2025. All the different sessions that we've done all the way up to, all the way up to the 18th and the FTSE expiry. Everything is recorded. As I say, there's every single trading day between 2019 and 2025 is all recorded live. So don't really need to prove anything on YouTube, because we're proving every single thing in all the recordings. But I don't think people would be interested in looking at all historical recordings of me ranting and trading, because the sessions are all about an hour and a half, and it gets a bit monotonous, I think, unless you want some, if people want to see the odd recording, then that's not a problem. In the wild trades, it seems like you don't use it, but do you ever consider using VWAP? I trade golf. No, never use VWAP. Never use VWAP. And the reason I don't use VWAP is because there is thousands of things that work and work really, really well. Do I need it? No. I'm a successful trader. Yeah. Do I make more than 1% a day every day? Yeah. So why do I need to introduce something that is that works? Because this works as well. The things that we do here, we only do them because we're not here to be elegant in trading. We're here to turn the market into an ATM. And the job is get in, get your money, and get out. And weighted stuff's okay, but it's weighted based on previous days. Why not use something that's relevant to what you're trading to now? Like Heikin-Ashi, like fractal movements, fractal breakouts. Weighted averages are good, they're fine, usually on longer time frames. They do work, and that's absolutely fine. What I hope I've put together is some very simple systems that are very easy to understand, and they actually work. And I know they work because we record it every single day, and every single Tuesday you can see every single recording that we do and all the uncuts. It just works. So if VWAP works for you as traders, then great. I've got nothing to say against it. What I will say is been trading for the best part of 30 years now, and I've honed out the things that are, might be 100, 200 really, really good things. And I've honed down probably the top 10 that work very well, very consistent in all market conditions. But yeah, also, cheers, Greg. Aikanashi. Me personally, if you don't use Aikanashi, you need your head read, because use Aikanashi candles that are looking at momentum. Use unbalanced volume, which is telling you what's happening in the market as the balance volume is growing. If the volume's growing, then the market's going up. If the ATR is falling, then although the market's going up, there's less participants. What you really want is unbalanced volume going up and the average true range going up, volatility going up, jobs at carrot, market's going to run. You only need some very simple things. On balance, is the volume going up or is it going down? Where's the momentum? Aikanashi will tell you where the momentum's going. What does the momentum look like? Is it a flat bottom Aikanashi, is indecision, or is it has got a little pimple on it, indecision there, a little pimple on it, or a flat bottom? In other words, has the market accepted the price instantly? Is there a mechanism to understand price action momentum? Hell yeah, a 9 EMA. So we know volumes coming through. We know we've got flat bottom Heikanashis. We know the price action's going up. Overall momentum's up as well. So why don't we go along? It's simple. It's simple. Got nothing against any other trades that work. They're great. If you've got a trade that works and you like it and it makes you money, that's the best trade to use. Stop my waffling. Oh, run over time again. Sorry. Let's have a look at that FTSE. Has that pulled down yet? Yes, it is slowly pulling down. So what I'd like to do today is we'll give it, what's the expression, give it some. So we've got that first impulsive wave that closed the gap and hit the target. And now if you can see a 15-minute bar here, that gives you a wherewithal to get to, what am I doing? To draw that, can I put something in blue, something that's very different? Right, if you can get a 15-minute bar, and these are all indecision 15-minute bars, that's terrible bar, terrible bar, terrible bar. But if we can get a 15-minute bar somewhere around here that gives you a position that takes you from up to seat ball and a stop down to here, a one-to-one risk reward. In other words, if you can get something like that, perfect. So for the guys that have already got the 2%, maybe a little bit more, wait for a 15-minute bar, ensure you can get a one-to-one risk reward if you're using a 15-minute bar. If you're not using a 15-minute bar, maybe you want to use a fracker. On the FTSE, use a 5-minute time scale and use CP1, closing price 1, because you want a good reaction on closing price 1. So you can see the indicators there. CP1 means closing price 1. If I move the closing price to the next bar, in other words, draw the next bar count, you can see how the fractals change shape. So for indice trading, we always use closing price 1, and then your fracker trade would be that. And that would get you straight into C-ball on a nice one-to-one risk reward. So there's a fracker trade. That would be good. You could do that. Not a problem at all. So we'll have a quick skip through. We can have a quick, all right. I'll just look at is Alice still in? She left. Right. So zoom out. Market is clearly bullish on the 4 hour and not on the 1 hour. Let's get rid of that bar there. Delete the ruler. I've not done all the pivots, so I don't know where the pivots in the market are. Where is the close? It's just where is the close on the DAX? 24,307, 24,307. So the market hasn't closed the gap today. Not yet anyway. So there's a gap to close all the way up here. So you would look to trade. I have to put all the. I've not put the pivots in. We're running out of time. So you'd want the market trading above the 200 EMA. Pivot is up here, the closing gap. So that's 88 pips away, which is better than an ATR. The ATR today is 37. In fact, 30% ATR is 73. So there is a potential for a really good gap trade there today if the market trades above the 200 EMA on the 1 hour on the DAX. So DAX has some good potential for a long, but you've got to wait for the setup. I would not trade the DAX short. Doesn't mean to say it won't work, but I only trade high probability setups, and the going short is a gamble, and I don't want to gamble. We can put the DAX on a multi-time frame view, MTF, so we can put that on the 4 filter. We'll put the DAX on the 4 filter and we'll look at the DAX. So the DAX on a 4 filter, Germany. So, right, so 1 filter short, 2 filters short, 3 filters short, 4, well, so the 4 filter strategy says we were short from 24,160. So this setup is a purely multi-time frame momentum setup, and we have 1 filter which is a Renko blocks. They need to be green if you're going long or red if you're going short. 20 EMA need to be trading under that. So if it's red, then this needs to be red under the 200 EMA and on the 1 hour 20 EMA here. And we need the MACD to say everything's falling off the cliff. So if Alice is still in the room and she wanted to look to go short, then there was a short signal there to go short. Stops would have had to be above the swing high. And it's one of those things, do you feel lucky, punk? You know, is there enough one-to-one to come all the way down? I'm not sure. But I would never trade against the overall trend anyway, so it's superfluous, really. But that would be the kind of thing that you'd be looking for. Is that we've got a one-to-one. There's not really a lot to stop that dropping into there, really. We have to look at the pivots to analyze that properly. But there's no super high probability trade there, so we just don't look at it. Right. Is there any questions? Before I go, there's a potential crude trade on as well. That's one of the things I was looking at. I think was there a crude? Yeah, we had a crude recommendation from. Yeah, it was a crude recommendation to actually go short as well, but I didn't put that in. So we don't want to overstretch everyone's account with margins for the FTSE, for Kiwi USD, for cable, for gold. We don't want to be doing that. We want to not spread ourselves thinly. We want to be able to get that 1%. But at the end of the day, if we've done all the trades that it said we've done, we've banked 3%. So we've done more this morning than you need to do in a full week. $65 a barrel was my target. I did not put this in for people to follow, but it is short. Would they have been as short this morning? Looking from 5:30 onwards, 5:30 was a potential short here, but completely overcooked on 15 minutes. You just would not take that. Pullback, there was a short there, 15-minute bar. Quite possible, but I'm not trading it. We've made some money, don't need to give the money back to the market. Gold, has that done any more movements yet? You can see we're overcooked on the stotch. We've put in our first green Icanashi bar potentially. We're not doing anything. It's slightly up. It's not worth talking about really. And we'll use a 15-minute bar entry system to get ourselves 2%. Do you provide bots? I've just done a whole session live on bots. Yeah, we do. I would like to find a reliable bot. Right, no such thing as a reliable bot. It all depends how good you are in managing them, to be honest. So a reliable bot. Well, if you look back at this recording, if you maybe people are in work and just looking at it's on silent or something like that. If you look back at this recording, there's a whole session on bot and how to configure a bot, how successful they've been. Have I still got that spreadsheet? I need to update the spreadsheet. I think I might have just, all right, must be still here. Oh, here we are. So this is what we call the fracker bots. And in my particular humble view, if you've got your own brokerage and you can pull and get information outside of your environment, then you can use artificial intelligence bots. But you can't here. All you can use is like deep learning stuff because you're within an environment. But the key to bots, I think, these are the results of me trading, all recorded, all time-stamped, everything that we do. If you think 24% return for a month is successful or not, that's totally up to you. I would suggest anything above 4% successful. But the bot is totally reliant on you as a master manager of that bot. Now, do a very quick session on this. These are the results. All kind of time stamped. This is the overall tracker. It's averaging 19% per month, and it's targeting roughly over 200% per year. The bots, I use AI technology all the time where I can, and all bot technology. So I have lots and lots of filters here that I can use to go and find trades for me. One of the things I do have is a tool that instantly tells me, is there anything I should put a bot on? So I have a bot. So I'm acting as bot manager. Got me dirty dozen bots. They're on the website here. I don't think people obviously haven't been going on my website because they're asking for things, and go on my website, have a little look. You can see what's on there. Oh, someone shot in. There they are, fractal bots, the dirty dozen. There's now 17 of them rather than 12 because we have a community. Go back and look at the recording. I've showed you all the community where we tell people what's going on and how things are working. But here you put that on there, it instantly brings up the screen to say this market is overcooked. In other words, it's overbought. It's ready to potentially come down. Put your bot on. It doesn't mean to say your bot will trigger and work. What the bot will do, it will sit. Can I bring one up? Anyone will do. That'll do. The bot will sit in the market between given periods of time. It won't trade certain periods, like when the American market opens, because we get high volatility. It understands the spread, it understands your bank, it understands the risk, it understands where the normal stops should be. There's a fractal bot engine that's called up under a separate code. It then looks for correct entry conditions. Once the conditions are met, it will then trigger. So you can put it onto your chart. It won't do anything unless all the conditions are met. But once the conditions are met, it will then do active risk management. In other words, when the market triggers and it moves and goes into profit, when the profit is along a certain time, it will then move a break-even trigger. When the market then gets into a certain time period, it will then assess whether it's in profit or not. If it's in profit, it will take the money and reset itself again and retrade again for the day. So this is one of the engines. You can check just to see if the triggers are correct. Well, the triggers are it's under the 200 EMA negative. It's overcooked. So all you do is what this is doing is sitting on, waiting for this next rally short going down, and it's just going to sit there and wait for the market to reverse, and then it will just trade. So these are fractal bots we use in our room. 415 long instantly tells me the FTSE is ready to go long. Instantly tells me euro pound ready to go along. You can see how fast these work. Short, instant, very fast. Kiwi USD going short. Well, we know that. We've just took money out of it. Crude going short. Euro Swissy going short. I'm a real advocate of using technology to find the trades for you so you don't have to. Your job as a trader is to have your bag of tools, which are your strategies, so your understanding of the market and your patience. Press the button, find the trades, decide whether it's something that you want to trade in your trade plan, your focus, and then trade it. You can then look at pull if you like using 1 hour. Look for a pullback. Look for the US 500. So actually, I'll talk about that before we go. US short, if you like swing trades, I should say. This is telling you the Wall Street Aussie pound is on a 4-hour pullback and ready to go along. Wall Street on the same. You can just see instantly finds them for you, just so you don't have to. Technology should be key in everyone's trading armory, and we use pro real time here, not TradingView. TradingView hasn't got can't hold a candle to pro real time. And I'll stop going through all the filters. You can see we have technology to find all the trades. So yesterday, the market, where's my edge gone? My daily edge, daily edge yesterday, whereas right. So yesterday we closed, the gap was left open, illustrated by this pink line, open cash market. The price rocketed out of the trap, new record highs, and puts in an M for murder on a 15-minute candle. So I'll show you that in a minute. Then the market dropped and retraced the whole length. So today, what we're going to do is we're going to look at the gap at 60.20 and then the closing gap. That was yesterday's gap, and then the closing gap at 60.25. And they're all the things that we kind of need to trade, really. Sorry, I'm reading the wrong thing here. We were left open on the 18th of July. So ideally, we want to smack that. The market needs to, as you can see here, my view was the market will come down first, hit this area, go back up, hit the close, then give C-Bolt a good rattling. And that's what it says. And I said this morning at 6 o'clock in the morning. That's exactly what the market is going to do. Because you've got to put your neck out. You've got to do your analysis. And those things you hold to be true as a trader, you've got to practice them all the time. So the market come out the trap yesterday, left the closing gap here. It came straight up, hit all the targets that we had yesterday, put in an M for murder pattern. And if you're not aware of these patterns, very powerful patterns on any time frame, but the higher the time frame, the stronger the actual pattern itself. So if we draw this here, we've got an M pattern there, here, M, and we call that M for murder. So when that bottom is broken, the market will come off in the same distance that, given the same distance the market broke. So if you look at the bottom here, I'll push this in. So there's the bottom, there's the top, and there's the M for murder pattern. Up, bottom, top right shoulder, bottom, break, 1-to-1 risk reward came down. If you like those patterns, then we trade them in the room. M for murder, W for wins, same thing, inversely correlated. So ideally today, can I make a permanent wiggle on here? The market will come down. Oh, heck, that's horrible, isn't it? I'll clear my drawings. Let's make it. I'll do that shape. The market will come all the way down here, close the gap. It will then come up, close the actual yesterday's gap here, and then it will take off. So what I'd like to see here is a nice 1% trade here, a nice 1% trade there, then probably wait for a break of this fractal structure coming down, and then take a 15-minute bar and front run Camarilla breakout long. So that is what I'm expecting today. In other words, what I would like to happen. The market's always right. Market doesn't know what I want, but from a technical point of view, it would seem sensible for the market makers to push this down, fill this gap, and then the close. But this gap will probably get closed today. Whether it'll go up first, let's get this off. Whether it'll go up first to close this gap, come up here, and then drop off into the close, like I did yesterday. I'm not sure. If you're not, I'm going to use your fractals, use your fractal structures. Fractals on the S&P on 5 minutes are good. So you can use fractal structure on here. Watch out for the pivot boys who always buy the daily pivot on the S&P. So once the market gets into this area here, you'll probably see a lot of buying strength come through. We do need this to be closed today, ideally, here. And then the closing gap. Then a break out of a fractal, maybe out of here. Be careful into here, and then head up towards C-Bolt. It could be a very lucrative afternoon's worth of trading. So it could be quite nice. Right, I'm going to go because I'm running over. Oh, there's still people watching. I never check. Yeah. Right. Okay. So I'm going to go now, guys. Bye, guys. Thanks for keeping on. I've obviously been waffling. I'm a little keen at what we do here. So, yeah. if you're interested in being a trader, give us a shout. I can show you around the room what we actually do. If wanting to be a consistent and profitable trader is something that you're interested in, then that's what we do every single day. If you want to get me free stuff, just go on the website, grab me free stuff, and hopefully that will help you trade. And also, hopefully, this has been a decent session. If it has, give us a thumbs up on the channel or subscribe. That would be really, really nice. And hopefully I'll see you all next Tuesday. See you guys. Bye-bye.
Cheers, Dave.
Cheers.